Hello, I'm Dan Passarelli of MarketTaker.com here on the floor of the CME Group. So one of the stocks we talked about today in our Market Taker Live Advantage Group coaching class was Amazon. Amazon.com's stock symbol AMZN. Now, Amazon is trading near its all-time high. It's never been over $685 a share. There's strong resistance at $680 a share. And I don't think Amazon's going to make new highs, at least not in the short term. Implied volatility is above historical volatility, making options expensive. And this sets up for one of the strongest call credit spread candidates I have ever seen in this market right now. The specific trade that I like is selling the regular December expiration, 685 calls, and buying the 690 calls to establish the December 685, 690 call credit spread. Now, right at this time, a trader could put that on for 95 cents. I like it anywhere above 60 cents. So I think it's a very, very strong trade at this time because of the high implied volatility and because of the strong resistance at 680 and because it's retail season. This trade is only about it expires next week. Regular December expiration, so it's right around the corner, very short-term trade. I don't think we're going to get any retail numbers or general economic numbers, except, of course, for the Fed announcement next week. We'll talk about that in a moment. That can push Amazon up over $685 a share. So this is a high probability trade. It has a really good shot of being a winning trade. Now let's talk for a moment about the Fed announcement next week, because that can be somewhat of a game changer, but let's talk through some possible permutations. The Fed announcement expected next week, there's going to be one of two outcomes. The Fed will raise rates or they will not raise rates. Now there's an 85% chance of the Fed raising interest rates a quarter point next week based on the CME Fed funds rate futures contract that's traded behind me here. Now, that 85% chance means if that's accurate and if the Fed does indeed raise rates, what does that mean for the stock market? Well, that should theoretically put downward pressure on stock prices. Now, to be fair, I believe that a lot of that move has been factored in. The falling stock market that we've seen over the past week or so was partially related to oil prices and foreign central banks, but also, I believe, partially related to pricing in this 25 basis point increase. So there's a chance that the market might sell off, but there's a chance that it might not. It might actually rally some, but I don't think that that'll be enough to push Amazon up to all-time new highs. Now, if of course the Fed does not raise rates, well, what does that do? Well, if the Fed does not raise rates, that could in the short term push the stock market up a little bit, but everybody knows it's coming. If they don't do it at this meeting, they're more and more certain to do it next time. If there's an 85% chance of them raising it this time and they don't, then it's more than an 85% chance of them raising it next time. So the fix is kind of in. I believe there can't be much of a sustained rally that can be supported long term. Now, all this supports this call credit spread trade that I like. It expires next Friday. That's regular December expiration. And before expiration, I always like to kind of manage my trade. So let's talk that through as well. If the market does rally on the 16th when the Fed announces rates, if for whatever reason Amazon rallies and it's up above 685, I would just simply close that trade, take my loss, my profit, or my break even, win, lose, or draw. I just simply close the trade and move on. If the market falls in the interim, and of course as time passes and I collect time decay, the trade starts working out better for me, I would still close this trade before expiration. I always like to take my profits off the table, free up that capital, free up that margin, and move on to the next, potentially more profitable trade. This is Dan Passarelli of Market Taker Mentoring on the floor of the CME Group, and we have a free ebook on our website. That's markettaker.com/ebook. And it discusses the 6 ways to generate income using options. It's free, doesn't cost you anything. Visit markettaker.com/ebook to get yours now. Trade well.